Does buying shares for long term on any company gives you PTSD because you have suffered a huge loss by cashing the top on shit stocks during this 2020-2021 rally in shit companies? Well, this is something you could do to protect your positions that you are about to open in another set of shit companies or not so shit companies, it doesn't matter. How's it going everyone, Mario here. In this video we're going to talk about a strategy called married puts. Let's say you're about to buy 100 shares of a stock on company Apple at a price of $134. You go and check the charts, it looks really ugly. Just like you. I'm joking, of course. You're only ugly if you didn't subscribe. Go ahead, subscribe. Don't you want to be beautiful? Do it. So, when you buy 100 shares on Apple, the current price of $134, you're technically paying $13,400 to purchase the underlying. So let's say the next day the company reports earnings. The stock can either gap up big time or gap down big time. A big uncertainty event. How can you protect your position? This is where the married put strategy comes into play. The main purpose of options is to reduce the risk of your long-term position. So you can go ahead and buy the week or 2 weeks out expiration put at a strike price of $140, which costs around $700. Think of it this way. You buy a car for $50,000. You pay for insurance $100 to $200 every month to it. You pay for insurance just because, just in case something happens, you wouldn't have to pay shit tons of money out of your pocket. Same concept, different scenarios. This put is $6 in the money to your average cost. Let's assume the next day of your purchase the stock reported earnings and suffered a big gap down to $128. With this 140 strike puts, it will protect your long-term 100 shares, so when you open your account, it doesn't look like an edge of top of a cliff where you might jump off of after looking at your portfolio. Wait, it gets better. Let's say the stock closed 2 weeks from now around $128 and you let your 140 puts expire there. The market will exercise your long-term 100 shares that you got initially for $134 at $140 per share. Now this is called as a hedge. It doesn't have to pummel down to 128, but in a worst case scenario, you're protected regardless. So let's check the profit and loss graph on this trade. You already have 100 shares of Apple at $134 cost average. Now you open the 140 puts expiring on Jan 6th alongside with it by spending an additional $700. If Apple stumbles and sells off to 128 or anywhere lower without protection, you're exposed to amount of money which you'll be losing in case of to the downside. With this married put, your loss is limited to a maximum of $161 to the downside. Even if Apple absolutely crashes and goes all the way to 110 or 90, it doesn't matter. Your position is protected in case of a sell-off. The delta is the amount of money you make or lose for every dollar move in a stock price. Let's say if Apple goes higher, you will still make money as the delta on the number of shares you got is higher than the delta on the puts you have. The delta of 100 shares is 1, which means for every dollar move, you'll be making or losing $100. With the puts, with the 140 strike, the delta on those is $72. So with the amount of money you lose gradually goes down as the stock price is pushing higher, but the delta on the shares stay the same. So you will be making more and more money as the stock is pushing to the upside, but you're still protected to the downside. If you want to learn more about options Greeks, I have attached a link to a video in the description. Go ahead, check that out as well. This is what we call hedging. You're protecting your portfolio from the worst, but also making money if the stock moves in your direction. This is one of many ways you can take advantage of the options to protect your long-term position. This strategy is called married put. I will attach more links in the description so you guys can read more about it. As always, take high probability trades, manage the risk wisely. Check out the Patreon for more quality content and to join our community of experienced traders. See you guys in the next video.